Joining us now from our Melbourne studio is Anthony DePaul. He's the Chief Executive of the Australian Stock Report to take us through some of the ones we should be watching. Anthony, thank you so much for your time this morning. We've just got over 10 minutes until the market kicks off. Been on a bit of a tear of late, a canter, if you will, 7 days in a row positive. It does look like perhaps we're facing some headwinds, maybe some profit taking today. What are you thinking? How's this all going to play out?
Exactly right. After 7 sessions of consecutive gains, this and the market being at key levels of resistance, the environment seems to be more of a holding or selling environment at the moment, and potentially locking in some profits just in case the market fails to break through.
And where do you feel the pain is going to be felt? We know financials have done pretty well of late. It's a big week for miners, some production updates coming through. But where do you think the pain's going to be felt, and what are the ones that are looking like particular value?
Interesting question. So last week the financials and materials sector outperformed the market, and the materials sector has had a very strong run over the last 3 months, especially in the iron ore and coal space. Materials in focus, it looks like there could be some smart profit taking in that part of the market, and that could be a drag on the market in the immediate term. Any investors that are currently sitting on the sidelines do have to assess whether buying in at these levels with companies like Fortescue, BHP and Rio, they have to assess whether it is a smart move at these levels. So I would suggest that they'll probably sit on the sidelines waiting for a bit more of a pullback. In the financial space, the banks have done quite well over the last couple of weeks, and the big 4 banks are only about 2 or 3% away from being in an overbought status. So at this stage, investors will most likely be looking to hold with the view of taking profits very soon.
Well, when you say overbought status, what do you mean? Is that based on how far they've run, or how much activity has been there? How are you defining that?
Correct. So how far they've run, also from a technical viewpoint, if you look at their relative strength indicator, it's about 2 or 3% away from being not only at the top of its recent range, but also overbought from that indicator's perspective.
Okay, well, let's talk through Westfield. Now, when we had this split, it wasn't really a split, it was a reconfiguration of the 2 former parts of that company into 2 new entities. Effectively, one Centre Group based here in New Zealand, focused on the Australian market. The Westfield component is overseas focused, in particular North America and Europe, and it was the one that was supposed to be geared for growth and to rapid expand. They have been hit by the fallout, though, of the Brexit, haven't they? Especially with their major malls like they have in London, but also the relationship with the mall being built in Milan, and also they have this huge project of World Trade Center. How are you looking at this stock? How are you assessing it? How well is it placed if Brexit does go through as currently planned?
Well, Westfield has been extremely surprising. If you look at some of the other stocks that have UK exposure, they've been sold off very aggressively over the course of the last month. You only have to look at companies like HGG, Henderson's, Clydesdale, BTT, and yet Westfield, what they've got going at the moment in terms of their development pipeline has acted like a bit of a Brexit repellent. I am very surprised by this. I think the market and the analyst community is looking very strongly at the hype around the World Trade Center and the positive impacts that's going to have on their company, and they've just ignored the potential impacts or unfavourable impacts of a potential deteriorating UK economy. If we look at UK, they've got about 30% of their assets under management in that area of the world, and let's elaborate on that. If the UK situation deteriorates, let's say properties get revalued, that's going to hurt the Westfield's assets in that part of the world. Also, if consumer sentiment takes a dive, that's going to hurt their occupancy levels, it's going to hurt the rent revenue that they're getting, and also the commission on the sales that are going through those stores. So I'm just extremely surprised that the market hasn't taken that into account. Being at the top of the range now, investors that are looking to err on the side of caution may be looking to take profits with that name in the immediate term.
Anthony DePaul, we'll have to leave it there. Thank you so much for your insights.
Thank you.
It's an interesting chart, wasn't it, Westfield? I mean, you could see the immediate impact, obviously, of the Brexit vote, but it has more than recovered and continues to be on that almost 45-degree line of growth. But Anthony Paul there pointing out a lot of potential risks being so closely tied as it currently is to the UK economy. If there is weakness there, then that is going to hurt them.